This video comes from Accounting 301, Chapter 3, Question 1, and we'll be focusing on preparing a balance sheet. What we have here is a post-closing trial balance for Ch3 Corporation. So what that means is we've made all the adjusting entries, and now our trial balance is ready to be used to put on a balance sheet. And again, the trial balance contains all our balance sheet accounts with our assets, our liabilities, and equity. So we'll use these account numbers and put together a balance sheet. Here again we have all our account titles and amounts. Briefly, I want to discuss the setup of a balance sheet. You're going to have your assets here on the left and your liabilities and shareholders' equity on the right. And as you should recall, our assets equal liabilities plus equity. So when we finish, if they don't add up, then clearly we've done something wrong. But for a bit more detail, we generally provide assets and then subcategories such as current assets, which are assets that are expected to be converted to cash within 1 year. Below that, we have property, plant, and equipment. This is going to be machinery, other big items, and we will put accumulated depreciation here as well as a contra asset to subtract from our property, plant, and equipment. Last, we'll have our intangible assets. So this could be patents, copyrights, and other things that obviously aren't tangible, but they're still assets to us. On the right, same thing, we have current liabilities, long-term liabilities, and then we move into shareholders' equity. There's normally just one account for that. So with all that being said, let's go ahead and dive in and start preparing our balance sheet. So starting here at the left side with these amounts, we have all our assets. So first thing we see is cash. Obviously cash is already cash, so that's a current asset. So we will place that under current assets for $43,000. We have accounts receivable. We normally assume accounts receivable will be converted to cash within a year. It's normally much less than that. So that's another current asset. And this will be for $36,550. Okay. Next, we have inventories. That's another item we consider that will be converted to cash within 1 year, so it will also be a current asset. $80,625. Prepaid rent. Normally, you may pay that, for the coming year, so it will of course be converted to cash within a year. So prepaid rent. $17,200. Then we have marketable securities. They can be either long-term or short-term, but since it wasn't specifically identified as long-term, we're going to assume they're short-term. So they will be current assets. And then we will plug that number in, and we will add all our current assets up to get that total, and that is going to give us $188,125. Okay. So moving on to our property, plant, and equipment. First thing we're going to have for that is machinery. So we'll plug in machinery. So we consider machinery equipment. And that's going to be for $155,875. And then what we need to do under this category is subtract out our accumulated depreciation, because if you recall, that is a contra asset. So we will subtract 11,825. which will give us our net property, plant, and equipment of $144,050. Last, on the asset side, we have our intangible assets, and the only one we have for that is going to be a patent. You'll write in patent. It's going to be $89,225. So now we will add up our subcategories. We have our total current assets of $188,125, net property, plant, and equipment $144,050, and our intangible assets, which was just the patent, $89,225. Adding all those up, we should get a total of $421,400. Moving over to the right side, let's work on our liabilities. First, we'll look at current liabilities. And current liabilities are amounts due to be paid to creditors within 12 months. So the first thing we have for current liabilities then is accounts payable. Generally, we pay accounts payable maybe 30, 60, or 90 days. So of course, it will fall under a current liability. We have accounts payable for $8,600. Second one is wages payable, so that's paying your employees, and that's going to be for $4,300. Next we have taxes payable, and we know as individuals we pay taxes every year. Businesses, they will pay them yearly as well, but they also have quarterly taxes such as personal property tax they may have to pay, so those fall under current liabilities. So with that, we will add up our current liabilities and get a total of $47,300. Moving on to our long-term liabilities, we only have one, and that's a bonds payable. Most bonds are 10 years to maturity, and some are even more. So we know that is a long-term liability. And that is for $215,000. We will add that to the $47,300 from our current liabilities and get our total liabilities, which are $262,300. Last, we will handle our shareholders' equity part of the balance sheet. We have common stock for $107,500. And then our second account is retained earnings, $51,600. If we add those two numbers together, that will give us our total shareholders' equity amount to be $159,100. If we add that to our total liabilities of $262,300, that will get us total liabilities and shareholders' equity amount to be $421,400, which equals our assets, so we have a correct balance sheet.